Hey guys, welcome to Stockscope. Today I would like to discuss with you all about the recent rise in gold price. Gold has just crossed an unbelievable milestone. It is now at over 1.15 lakh per 10 grams in India and nearly $3,800 per ounce globally. By March 2025, the price had already gained 17% for the year, reaching a record of 88,946 per 10 grams. By August 2025, the price for 24 karat gold was 99,623 for 10 grams. And by late September 2025, gold price hit a peak of 1,15,600 per 10 grams. But the big question on every investor's mind is, why is gold skyrocketing so fast? And more importantly, is this rally just the beginning or are we close to a peak? In this video, we'll break down the real reasons behind the massive gold price surge in 2025, what's driving it both in India and worldwide, what it means for your investments, how much further can gold price increase in future, possible reasons that can slow down the rise in gold price, and how the gold ETFs of India are performing. You can jump to any of the topics which you need to know about. Now, come on, let's start. Let's start with what is the performance of gold price in Indian stock market and in the world. To give you an idea of its long-term historical performance, I show you how the price of 10 grams of gold has grown significantly over the decades. In 2014, it was 28,000. In 2020, it was 48,000. In 24, it was 76,000. And finally, in August 2025, it rose to 99,000. While the world considers gold very safe asset, in India gold is attached to emotion too. Buying gold jewelry is considered very auspicious in India. Therefore, people buy lots of physical golds. But there are other options to invest in gold for say gold ETF, gold bond, digital gold, etc. You know, gold ETFs are very popular among the new investors. Here the return is extraordinary. In 2025 alone, gold ETFs have given an average return of 47% so far. Also, there are gold shares, the stocks of gold mining companies, which offer even higher returns but also come with more risk. One analysis showed an investment of 1 lakh in gold share in 2019 would be worth over 5,87,000 by 2024, a return of about 488%. Can you imagine? Now, let's see gold's performance in the world. Not just in India, but globally, gold has also seen a strong rally due to economic uncertainty and geopolitical risks. Gold prices climbed as much as 30% in the first part of 2025, peaking at $3,500 per ounce in April. As of late September 2025, gold is trading at approximately $3,800 per ounce. Now, experts are very optimistic about gold's future performance for financial year 2025-26. Now let's move on to gold price fluctuation over the years. There has been a sharp increase in the price of gold in India, especially over the last 2 decades. The price has climbed from around 4,500 per 10 grams in year 2000 to over 75,000 in 2024 and has even surpassed the 1 lakh mark in 2025. Here I bring to you a table showing the average price of 24 karat gold per 10 grams in India for recent years. From 2014 to 2019, the gold price moved only 7,000, but see in 2020 it has moved around 13,000. Gold price became 48,000 and since then gold curve has only been upward. Now I think you should see gold's yearly return percentage. While the price shows a long-term upward trend, the annual returns can be quite volatile with both strong positive years and some negative years. Let's see the table. In some of the years, gold has given negative returns. Suppose in 1997 it has given minus 12% and recently in 2015 it has given minus 5% return. On average, gold price has maintained more than 20% return, and that is really good. Now that you know about the gold price fluctuation and its recent performance, so what are the reasons behind the gold price increasing now? The thing is, when people, investors and numerous countries feel worried about the economy or world events, they often turn to gold because it has a long history of holding its value. This rush to safety increases demand, which in turn pushes the price of gold higher. Number 1. Global economic and political worries. Geopolitical tensions, conflicts around the world, such as those in West Asia and Eastern Europe, and the tense relationships between major powers like US and China create uncertainty. During such times, investors prefer the security of gold over more volatile assets. Next, fear of recession. When major economies like US and China show signs of slowing down, people worry about a recession. In this environment, gold is trusted to hold its value better than stocks or currency. Number 2, protection against inflation. Inflation is when your money buys less than it used to. Gold has historically been a great way to protect your wealth against this loss of purchasing power. A reliable store of value it is. Unlike paper currencies like rupee or dollar, which can lose value due to inflation, gold is a physical asset with intrinsic worth that has been trusted for centuries. When people are concerned that inflation will erode their savings, they buy gold, which increases its price. Number 3, actions by central banks and US dollar. You know that decisions made by major central banks, especially the US Federal Reserve, have a huge impact on gold prices, such as a weaker US dollar. Gold is priced in US dollars globally. When the US dollar becomes weaker compared to other currencies, it becomes cheaper for people in countries like India to buy gold. This higher demand from international buyers pushes the price up. Again, the lower interest rates. When interest rates are low, you don't earn much by keeping your money in a savings account or bonds. Gold doesn't pay any interest, but it becomes a more attractive option when other safe investments aren't offering good returns. The expected US Federal Reserve's interest rates cut has been a major reason for the recent price surge. Number 4, high demand from big buyers. It's not just individuals who are buying gold. Some of the biggest players in the world are buying it in massive quantities. For instance, central banks are stockpiling gold. The central banks of many countries, including India's RBI, have been aggressively buying gold to diversify their reserves and rely less on US dollar. By the end of 2025, central banks are expected to buy around 900 tons of gold. Can you imagine? This huge and consistent demand from major global institutions is a powerful driver for higher prices of gold. Apart from banks, investors are also buying gold through financial products like gold ETFs, which allow them to invest in gold on stock market without physically holding it. This is further boosting the demand. Number 5, strong demand in India. In India, gold has a unique cultural significance that creates a steady and high level of demand, helping to keep the prices firm. Cultural and festive buying. Gold is an essential part of weddings, festivals, and religious ceremonies in India. This consistent cultural demand, especially during peak wedding and festive seasons, ensures that there is always a strong market for gold, which supports its price. Last but not least, number 6, basic supply and demand. At its core, the price of gold is also affected by simple economic principle of supply and demand. The amount of gold that can be mined each year is limited. Demand for gold is consistently high and comes from multiple sources: for jewelry, for investment, from central banks, and for industrial uses in electronics and green energy technologies. When strong and diverse demand meets a limited supply, prices naturally rise. Now that you have seen the reasons behind the price surge in gold, it is time for you to know how much further can gold price increase in future. Several financial experts have a very positive, bullish outlook on gold, with major institutions forecasting significant price increase into 2026. For instance, JP Morgan's research predicts that gold prices will continue to climb, expecting them to average $3,675 per ounce by the end of 2025 and rise toward $4,000 per ounce by the middle of 2026. On the other hand, UBS is even more optimistic, forecasting that gold could reach $4,200 per ounce by mid-2026. Their projected timeline suggests a steady climb. By the end of 2025, which is Q4, it should be between $3,800 to $3,900 per ounce. By early 2026, which is Q1, it should be in the range $3,900 to $4,000 per ounce. And during Q2, which is mid 2026, it should be between $4,000 and $4,200 per ounce. Based on data from 2014 to 2024, calculated a historical annual growth rate for physical gold at 11.3%. Now comes the main question: is it a good time to invest in gold now? The current market environment in 2025 appears highly favorable for gold. Whether gold is a safe investment for you now depends on your financial goals, risk tolerance, and investment horizon. For long-term investors, gold is highly recommended as a core component of a diversified portfolio to preserve wealth and hedge against risk. For high-risk or high-return investors, gold stocks or shares of mining companies might be more suitable, as they have the potential for higher returns but also carry more risk. For balanced investors, Earlier gold bonds, like sovereign gold bonds in India, offered a middle ground providing returns linked to gold prices plus a fixed interest income without the storage hassles of physical gold. But now you can invest in gold ETFs if you want. Now let's talk about gold ETFs for a while. How are the gold ETFs of India performing? They are performing exceptionally well in 2025. The performance has been consistent across major funds. There are Invesco India Gold ETF and UTI Gold ETF, which have delivered the highest returns, both at 47.35% in 2025 so far. There's also Nippon India ETF Gold Base, which is the largest fund in this category and has gained 47.07% during the same period. Also, the number of retail accounts in gold ETFs has seen exceptional growth, increasing by 15 times over the last 5 years. The total number of investor accounts reached a record 6.8 million as of February 2025. The consistent investor interest has boosted the cumulative asset under management, or AUM, of gold ETFs to $6.4 billion. The number of domestic gold ETF products has also increased to 20, reflecting rising demand. By the way, if you are interested in gold ETFs, you can also check out HDFC Gold ETF, which is noted for competitive fees and strong performance. SBI Gold ETF, it is backed by SBI and convenient for retail investors. Then there's ICICI Prudential Gold ETF, also that is a very good one. It is noted for reliable management and consistent returns. And finally, Kotak Gold ETF, which is considered a good option for diversification. You can check this out too. Finally, I would suggest you to do your own research before investing any money in this gold ETFs. This is not at all a stock recommendation or investment advice video. It's just that I am thinking of choosing some of these ETFs for my personal portfolio for diversification, of course. And on this note, this is it for today. Do let me know in the comment below how you liked the video. I will be back in my next video soon. Till then, stay tuned and keep investing. Bye for now.